if you can offer to your customers who, let's face it, right? Those customers are using these other digital tools, right? And if you can offer those customers the ability to receive RTP, they're going to take advantage of it.
All right, welcome to another episode of FI Today, the podcast where we talk about all things banks, credit unions, payments, and more. I'm Kevin Miyamoto, co-founder, COO of Identifee, also known as Modo.
Hello, Moto.
And we have an awesome episode lined up for you all today. We have avid Pittsburgh sports fan and current VP of Business Development at the Clearinghouse, Mr. Steve Douglas, joining us on the podcast today. So, Steve, welcome.
Kevin, I appreciate you having me. And just to clarify, avid Pittsburgh sports fan, which does no longer include the Pittsburgh Pirates.
Okay, well, hey, at least, honestly, I'm a DC sports fan, so...
You feel my pain.
Yeah, the Commanders, or Redskins, formerly Commanders, now, we didn't even have a team named 2 years ago. We were the football team. So no one can talk poorly enough about sports with me because the DC sports town just takes the cake. It's the worst sports town ever. Anyway, Steve, thank you for joining the show. Really appreciate having you on. I guess to kick things off, give the viewers some background on who Steve Douglas is, and then how did you get to your position today?
Yeah, so really quickly, I've spent, longer than I would probably like to admit, since graduating college, in the banking sector. So working in a few different roles, everywhere from running a branch of a private banking department to the treasury management group at a large financial institution here in Pittsburgh. And so I've spent, it's probably over 20 years now in the industry. And really the bulk of that time has been spent in the payment space, in the treasury management / payment space. And really what's kind of driven me to this point here and really my passion for real-time payment specifically is a lot of those years were spent selling lockbox solutions. So check, physical check payment solutions. No offense, those are very important, and they're not really going away as fast as anybody has predicted in the U.S. But from a being new into the space perspective, wasn't really where I saw myself spending my entire career. And so I was lucky enough to work at the FI that sent the very first real-time payment. And so through that process, just really kind of fell in love with what faster payments is, where it's going, and really how it's going to change, how we all interact and pay. People that I speak with outside of the industry that have no idea what RTP is, and I talk to them about it, and you see the light bulb kind of click and go on when they realize the benefits and the power of it.
Yeah, and you could say it. I mean, checks suck. It's no one likes using checks, right? I mean, you think about when you're going to pay your handyman for putting a playset in the backyard for your daughter, which I'm going through right now. He only takes a check, right? Actually, I got a call from my FI today. Apparently, I only found a checkbook that was from an account that closed 5 years ago. So I literally got a phone call like 20 minutes before this podcast and had to confirm that was me actually writing that check and it wasn't fraud. But, no one, we could talk about checks in general for a while, but you have to ask yourself as a consumer, everyday person, if I were to pay you for going out to dinner, am I going to write you a check, or would I rather just send you a Venmo payment or an instant payment of some sort? It's a no-brainer.
Yeah, I mean, when you can control the settlement of that payment, I mean, literally down to the seconds versus, I remember a few years ago, I gave my aunt a check for something, and it took over like almost 3 months for her to cash the check, right? I mean, waiting around for that is in today's expectations, we don't need to do that.
Yeah. Well, and then, like balancing the checkbook, that's a whole nother thing too. If you're writing out a bunch of
I,
checks, you might not forget who you send a check to. There's a whole thing. But that brings me to a good question, Steve. So when
this
we
is
think
this is a
about,
safe space though, Kevin, right? This is a safe space.
yeah,
I have never
absolutely,
balanced a checkbook
yeah.
ever.
So let's talk about the advantages of RTP, because right now, if you were to go ahead and Google what is an RTP payment or what is an instant payment or faster payment, the information out there is all over the place, right?
hmm
So I want
hmm
to hear it directly from the source. What is an RTP payment? And then, let's have a broader discussion on what are the benefits of RTP payments as opposed to traditional forms of payments, namely checks and ACH and wire.
Sure. Sure. So what differentiates an RTP payment from a regular a different type of faster payment, right? So same day ACH is a type of faster payment. Um, an RTP is what I call an immediate payment. So we have end-to-end settlement within 15 seconds, right? Which gives two things, right? It gives visibility um, to that payment. So when I send Kevin a payment, I know right away because Kevin gets a message saying Steve sent you a payment, and I get a message saying Kevin received your payment. So on both ends, you receive that confirmation, and so that visibility, and then also that instant settlement, so that you know that it's there, and you can really time things out, right? I mean, think about the utilization in a bill pay scenario, right? Being able to pay something, let's say, a Friday night at 10 o'clock, and you realize, oh darn, I didn't make, I don't know, my electric payment, and if I don't make it, God forbid the lights are going to get shut off this weekend, right? You can control that. And on the other end, they know that the funds are there, and they're good funds because they're irrevocable payments as well. So they can't be clawed back. So the instant payment, and what RTP is an end-to-end settlement of that payment, bank to bank, within 15 seconds. So that differs, right? When I golf with my buddies, and I remember just joining TCH in 2020, and I was in this golf league, and the guys they were giving me grief. One, because you're going to take a new job in the middle of a pandemic. You're never going to meet anybody that you work with, right? And then they said, well, what do you do? And so when we started talking about it, they said, but yeah, Steve, we've got Venmo, we've got Zelle, we've got PayPal. We can move money um, back and forth instantly already. So to the folks outside of the payments industry, they see that as, hey, we've already got the money. To us bankers and us folks in the industry, we realize that end-to-end settlement is actually really, really important, right? Because banks on both sides are sure that they've got the money, and then businesses are also sure that they have the money, and it can't be pulled back like an ACH.
Yep, and the other thing too is you bring up kind of the Venmo example. If I were to send you a Venmo payment today, you try to put it in, withdraw and put it in your bank account to withdrawal. You can get it within a few seconds. You're going to pay a fee for that, or you can wait 24 to 48 hours and have it funds finally hit your account where you're
Right.
able to withdraw it. As opposed to an RTP payment where you send it to me. You said it settles in 15 seconds, and funds are available within that 15 seconds. So you send me
hmm
$100, I can immediately take that $100 out and use it as I wish, which I think is a game changer as well.
Correct. Yeah, and again, my background was, I mentioned, kind of on the check processing side. Um, I spent quite a bit of time um, selling international payments as well. So correspondent banking perspective, right, where you would send a payment, send a wire, think of that, overseas, and when they would get it, there was four stops in between. It took, it's supposed to be instantaneous, but it took 3 days for them to realize that the funds were in their account. And then if you send $1,000, and all of a sudden there's 9,000, you know, $555. What happened to the rest, right? We have
Hmm.
none of that in the RTP network. So the amount that is sent, there's no chunks taken. As it's currently set up, there is no correspondent banking capabilities. There are some things we're working on there, um, and to hopefully kind of grow the network and allow banks to not have to as heavily invest in operating new payment rails. Maybe they can work with a bank that's already doing that. We're working on that, and I think that's something that we could see in the future. but right now that's not the case. But right now it's again, from a a payment type perspective, the things that I like to kind of highlight are the instant settlement, the visibility, and then the other part is a relatively low cost, right? We don't set any prices as a network operator. We allow the banks to do that, right? We operate the rail, they develop the product, and they set their prices. But it's safe to say that what we envision this network being is something that's accessible for all banks and affordable for all banks.
Yeah, and I think that's important to point out in that you and I have talked about this a lot in that the RTP network isn't a product itself, it's just a payment rail. So
Right.
for those FIs out there, if you're interested in implementing RTP, you're still going to have to build the products and services around the RTP network. And it goes back to just the best practice of not just implementing RTP and trying to figure out how this could apply to your bank or credit union. Really take a deep dive and look at your portfolio and see what products and services would apply to this subset of customers or members, and then would RTP help out with that subset and build it around your customer base, not just build it around the products. I think that's
Right.
important to note.
Yeah, that's really important to note because I think a lot of banks that have joined, right? Most first of all, most banks have joined so they're able to receive transactions first, but when they're starting to move towards the send functionality and all that can provide, I think they're looking at it like, well, how do we boil the ocean here and kind of recreate everything? You don't need to do that, right? At least the way that I look at it. What I think you need to do is look at maybe some verticals. What makes your financial institution your financial institution? What separates you? Develop products and services for your specific customers. If you have a vertical for mortgage originators or somebody along those lines, right? This could be a perfect solution set, and you can customize things and offer it to those specific customers. You don't need to give this to every single one of your customers, the ability to send transactions. You have a lot of control with the RTP network. You don't need to give every single customer the ability to send. Right now, our limit is $1 million. You don't need to give every customer the ability to send $1 million. You can control that so that you feel comfortable also from a risk and fraud perspective.
Yeah, one of the other things that I wanted to talk with you about is I hear from various FIs out there that, hey, because it's 24/7, I need to have people back office or in ops constantly manning. Uh, is that true? I mean,
No.
how does it work?
So think about how you're operating your ATM network today, right? You don't have people sitting there 24/7, operating the back office operations, operating the. We're going to edit that part out. Um, the back office operations, you won't need 24/7, 365, right? Things move. People are taking money out from ATMs constantly around the clock now, and you don't do that. And it's very similar with RTP. That's exactly what we're seeing. We've seen banks, and I was just on a panel with a bank that the gentleman mentioned that specifically. He said, we do not staff any differently than we did before we had RTP.
Yeah, I mean, I think that's just important, and I guess if you're thinking about the makeup right now, you said most banks today are receive. So what does that mean?
So that means they're able to receive transactions, right? So that means that they can, if their customers, right, let's put it this way, our three biggest use cases um, are digital wallet, payroll, and cash outs, right? So cash outs would be gaming cash outs. Digital wallet would be, a Venmo or a Venmo or PayPal transaction, and payroll would just be getting paid via RTP. Um, so the ability for your customers to receive those funds is really valuable to you as a financial institution, right? Um, Again, I mentioned the irrevocability of these payments. I mentioned the instant settlement. I mentioned the visibility, right? Those three really important things that make an RTP an RTP. Um, if you can offer to your customers who, let's face it, right? Those customers are using these other digital tools, right? And if you can offer those customers the ability to receive RTP, they're going to take advantage of it, right? And you as a bank might not even necessarily know. They can go into their Venmo app and they can pull those funds down, and there's not a whole lot you as a bank have to do. You have to take in that money, you have to make it available to your customer immediately. That's it,
Mm-hmm.
right? So right now we have 340 plus banks on the network. I think it's 341. That number will change, I believe, tomorrow. Every Wednesday is when we typically kind of update those numbers. So 341, I believe, was what I saw last week. Um, and that means 341 banks are able to receive transactions. We are seeing more banks move to the send space. Right now, that number's not nowhere near the size of the full network, right? But it's still, we're seeing the large cash management banks kind of as the driving a lot of the send volume. But we're also seeing there are two community banks that are in our top 5 for senders. They've developed
Wow.
really powerful use cases, and so there's I think really good things happening with the network, really good momentum, and just a really positive vibe right now around TCH regarding the RTP network.
Yep. So send or receive bank, meaning that I can receive, I or me as the receive bank or my customers can receive RTP transactions. Send and receive means that my customers can both initiate and receive RTP
Correct.
transactions. Okay.
Correct. Yep.
Got it. Okay. No, I mean, and that's great. And I guess, you know, some of the other things that I've been hearing just from some of the different FIs out there is that we're interested, but we're also not interested. Not sure. It might be a big lift. They're worried about the staffing, as I mentioned before. So, from your perspective, is it a big lift? Are there things that FIs can do to make it easier on themselves? What's the
For sure.
normal process or timeline take? I think a lot of people would be interested if they knew how easy it would be, if it is easy to connect. So I'd love to talk through that process.
Yeah. It really is quite simple. We've done quite a bit of work, marketing material that's out there, podcasts that we've done. Shameless plug for the Payment Nerds, which is our podcast as well. But what we've done, and we've worked with third-party service providers, so fintech companies that can help financial institutions to connect to the RTP network in as little as 4 to 6 weeks, really.
Wow.
And it can even be less than that, depending on the speed with which the paperwork moves and all of that kind of stuff. So we say 4 to 6 weeks, buy a little bit of time in there, but it can be even a little bit quicker if you choose a provider that is what we call express onboarding. So that means what we've done is as you can imagine, right? Almost 10,000 banks in the country. Us as an organization, if we were to try to onboard 10,000 banks at once, it would be,
Forget about it. Yeah, take
I
forever.
mean, no organization could handle that, right? It's just a huge task. But we've partnered with these fintechs, with these, we call them third-party service providers. Think of, some of the major core providers. Think of some smaller kind of startups as well. We've partnered with them, and they bring a bank to say, hey, we want to use the RTP network. We help them to get through that process. They stand that bank up. Once they stand up 3 banks, that institution, that TPSP is now allowed to implement more banks or more FIs, so credit unions as well. They can implement those FIs on their own without involvement. So we've really done a kind of a train the trainer module, or model, I should say, for these TPSPs. And so what that does is that allows those FIs to join very, very quickly. As far as the lift goes, right? There's some technical work that you'll need to do with that TPSP. There's also a piece, and I don't want to get too technical here, right? But the way this all operates is via one central account at the New York Federal Reserve. And every bank on the network, think of it as a big pie. Everybody has a slice of that pie, and that your slice kind of ebbs and flows, right? As you get transactions in, or if you're sending, transactions are going out. So your size of your pie can kind of ebb and flow. Um, as a receive institution, all you really need to do is move those funds out at really whichever cadence you wish. Right? It can be every day, it can be every week, it can be every month, it can be every hour. For all we really care. I mean, that's totally up to you as an FI. You don't have any balance requirements to keep in that account. All you're going to be doing is taking those funds in and then subsequently matching those funds that you've taken into the customer's account that's included in the message that you receive, with every payment.
Hmm. Hmm. Hmm.
So really, really simple. I think I probably made it a little bit more difficult there. Just once I get going and talking about,
Yeah, no, I mean
um,
for sure, like the reserve requirements, that's going that's pretty far in the details for a lot of folks. But I think the biggest thing is what you just said. Partnering with the TPSP, third party service provider, really makes it a pretty simple and straightforward process. And so
Mhm.
if FIs are interested in getting set up and running on the RTP network, there's a lot of help and there's a lot of resources, and there's other third party providers that can really assist them with that process.
Absolutely, absolutely, and I would say that's, you know, the number one thing is, some banks have connected directly to us, right? And that involves a whole host of
Yeah.
different technical requirements. That can take time, right? It's certainly more robust, but it can take a lot of time to do that. And not every bank has the time. Not every bank has the ability or the cost.
Yep.
You know, so it's there's a lot there, but if you find the right TPSP, right, and you find one, whether it's your core provider or a company outside of your core provider that you choose to use, it can be a really, really simple process.
Yep. And so last thing I want to touch on before I let you go, and hopefully you're able to comment on this. Obviously, FedNow is coming out next month. I've heard you speak at numerous conferences. It's not an either or. It's more of a, really FI should be looking to implement both. So I'd love to hear it from you.
Yeah.
What approach are a lot of the top FIs taking when it comes to RTP and FedNow? Would just love to hear your perspective on that.
Yeah. So again, Kevin, you're exactly right. This isn't a one or the other. This isn't going to be a winner and a loser, right? I speak at a number of conferences, and I speak, quite frankly, with, um, you know,
The
members
Fed all the
of the
time.
Federal
Yeah,
Reserve, right? I mean, so,
yeah,
and we get along very well. And look, they are our competitor. They're our regulator, right? It's a really unique setup. But when you look at the industry itself, right? We look at ACH. We operate an ACH network. They have an ACH network. We operate a wire network. They have a wire network. Checks, right? So we've got all of these things, and we compete with each other all the time. This is going to be the same thing, right? Eventually, where we're 5 years in, they're just getting started, so they're going to kind of probably come at this, you know, uh, a bit more slowly, just getting started, right? That's to be expected. But there's not going to be a winner and a loser here, right? This is going to be two networks, and I think it behooves every financial institution to be a member of both networks, so you can, because you can receive payments from, regardless, the financial institution that wants to send you a payment, you can receive it. The worst
hmm
thing you can do as an FI, right, is to have a customer, say you've worked with a small business as they've grown over the years. The worst thing that can happen as they grow up, they say, you know what, we need to receive these payments, and now we can't do it because you're not connected to one or the other. They go down
yep.
the street, they meet a banker from a different institution that has the ability to connect to both networks or is already connected, and they say, you know what, I want to do this with you. But when they go to that bank's going to say to them, well, we don't just want your deposit accounts. We want your lending relationships. We want all of your investments. We want all of that stuff, right? And now you, as an institution who's grown up with, helped this company grow, you're left out in the cold because they're moving all of their business away from you,
Well,
right? So
yeah, I mean, you hit it on the head. It's, let's imagine that, especially when we talk about fintechs and embedded payments and how that's just a booming industry in itself. But if I'm let's say that I am a driver for a rideshare company and I want to get paid out instantly. Well, if my FI doesn't have RTP and, that rideshare company leverages RTP, guess what? I'm out of luck. I can't get paid out instantly, right? So what do?
right.
I'm not going to change my desire to want to get paid out earlier. I'm just going to find a new FI where I can get paid out earlier. And then to your
Mhm.
point, maybe it starts with just the payouts. Pretty soon it could move to checking. Pretty soon it could move to mortgage, and there's a whole domino
Yeah.
effect. So I totally agree with you. It's better to have options for your customers or your members rather than
Hmm.
just dictating to them, hey, you must
Right.
have this in order to do that.
Yeah. Yeah. So I just think to reiterate that point though, Kevin, this isn't an either or proposition. This is you really need to be on both. There will be institutions that are sending primarily on one or sending primarily on the other, and you want to be able to catch those payments, which regardless which network they fall on.
Yeah, yeah. So last question for you before I let you go. Let's say that an FI out there, bank or credit union, is thinking, we're not sure if we should move forward with RTP. What are some questions that they should be asking themselves to determine whether or not RTP makes sense for them?
So I would ask them whether they see the digital payment space as the future. Um, I've not run into any banks or credit unions yet that have said, Steve, we're really banking on checks making a big comeback, and in the next 20 years becoming the overwhelming way that people pay. Um, so I've not run into anybody asking me that question. What they have asked is, you know, that question essentially leading to, well, should I wait for FedNow or should I join RTP? So I would say this: it's here. We're seeing over 19 million transactions a month on the RTP network right now. These are not transactions that are taking really, this isn't converting ACH to RTP or wires to RTP. These are by and large new transactions that are out there in the space. Um, and so what I would say to those FIs is, do you want your customers to be able to receive these funds? And do you want to give the best possible customer experience to your clients? And if the answer is yes, we do, right? Then you need to take advantage of RTP or FedNow, right?
Yeah.
It's important. And again, we've done this in a way that we hope, really it doesn't require a ton of lift. Um, you know, based on the model that you choose to utilize.
Yep, yep. So Steve, thank you so much. Lots of good information. If listeners want to get a hold of you, what's the best way to get in contact?
Yeah, so you can either reach out to me on LinkedIn, so Steve Douglas, Douglas has two S's, or you can reach out to my email, which is just steve.douglas theclearinghouse.org.
Very good. All right, Steve, thank you much. Thank you so much for joining the podcast today. Really appreciate it. And for those listeners out there, we'll see you on the next one.